Hello everybody, Steve Griffiths here, developer of the MT Predictor software program. In today's MT Predictor video, I'd like to look at our Elliott Wave module in our software. But as usual, we start with our risk disclaimer, and just to remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. All trade decisions are your own sole responsibility. In other words, no matter what trading approach you take, losses can and will and do unfold. It doesn't matter what trading approach, you always will be losing trades. Right, so I want to have a look at the NQ from yesterday using a day session only chart. That's where the market, we only follow the market between 9:30 and 16:15 when most of the volume actually occurs. In MT Predictor we use my unique isolation approach to Elliott Wave. The reason I redesigned the way we look at Elliott Wave many years ago, I've been following markets for 33 years now, and I've noticed that basically markets go in cycles. So half the time markets are random, you can't do any kind of forward analysis or anything like that. Basically the pattern is non-discernible. So half the time the market is in the market position is in a pattern where you can get a clearer picture. So what does that mean for Elliott Wave? Well, traditionally Elliott Wave is a tool where if you know where you are in the sequence, you can then project forward to know where the market's going. But because markets are random half the time, that means the Elliott Wave principle tends to fall down in practice. And I think this is what a lot of people have found who've tried to use the Elliott Wave analysis theory. In practice it basically falls down, breaks down, whatever you want to call it, and they then deem it's not reliable. But I want to show you what I do in MT Predictor, and this is what I developed many years ago, and I call it my isolation approach. What we do is we basically start the sequence when the market is making a higher time frame support and resistance. In other words, reversal at a higher time frame support and resistance. In other words, when the picture is becoming clear. So for this I'll go out to a higher time frame chart. So on the 3-minute chart it would be the 15-minute chart. I just want to show you, if I go back before yesterday even opened, if we place a DP off the last major high, which was here, we right mouse click, do decision point. This gave you an area of resistance, but as you can see the resistance was on the chart in advance, so before the market even got there. If I turn training mode off, you can see this is what happened on the NQ. It went up, it hit that resistance area, which made basically the high of the day before it started to decline very nicely for the rest of the day. In other words, at this point in time the picture is becoming clear. So when we come down to our 3-minute chart, this is when we start our Elliott Wave sequence here, i.e. when the picture becomes clear. So what did the market do on Friday? Well, it made an initial decline down. In Elliott Wave terms, this would be a wave 1. It then made an initial correction up. This would be considered a wave 2. So let's use our trading mode, and we jump back to basically when this unfolds here. So you can see here's our start of a sequence. The initial decline would be wave 1. This rally up here would be wave 2. So let's use our Elliott Wave tool to see what it found at the time. So we right mouse click, we do decision point. Whoops, sorry, we don't. No, we do right mouse click, we do Elliott Wave intermediate. Sorry, there we go. And there it gave our count, which is a wave 2 or B. And that was our WPT, or wave price target zone, which is an area where wave 2 is most likely to end. As you can see, that caught the high nicely. It then started to decline down. Just want to show it as it goes down here. It goes down, makes a low there. I'll just clear the chart off again. So let's place our Elliott Wave tool over this pivot here. We right mouse click, do Elliott Wave intermediate, and you can see that's exactly what it found. A wave 1, a wave 2, down to a wave 3, where the low there was coming in at the typical wave 3 WPT. Again, these are Fibonacci clusters of where these Elliott Wave patterns are most likely to end. Let's clear it all off. Market then rallies up again, makes a high here, starts to decline down. I'll just right mouse click over that pivot, do Elliott Wave intermediate. You can see that's exactly what it found. That is a potential wave 4 reversing within the wave 4 WPT. Clear everything off. Let's go down. But I'll turn trading mode off now so you can see where it goes down to the low of the day. If I come down at the bottom here, I'll right mouse click, do Elliott Wave intermediate. You can see it found a 5-wave sequence with the low coming in and around the typical wave 5 WPT. So in other words, the market on Friday unfolded pretty much in perfect Elliott Wave patterns, where The important point is starting the sequence at the higher time frame support and resistance. That's the unique thing we do at MT Predictor. We've been doing this for, well, decades now, and it's the way to basically get Elliott Wave to work in an environment where markets are random about half the time. So we only look at the Elliott Wave pattern when the picture's clear. So that's all well and good, I can hear you say, but how about trying to forecast where these markets are going? So let's go back to around here somewhere, and let's have a look at this. So you've used the Elliott Wave tool. You've said, right, okay, this is a potential wave 2 or B. You think it's going to be a wave 2 because that starts at a major high, so you want to project in advance where the wave 3 low is likely or possibly to come in. So let's going to clear this all off. So here we have our WPT or wave price target tool. This allows you to project areas of where the next sequence is likely to come in. So we're doing a WPT down. We're looking for a potential wave 3. It shows you how many clicks to make on the chart. So we'll start it at the start of wave 1. We'll then do our next click at the end of wave 1, and now at the end of what is a potential wave 2. And here you can see it gives you in advance the area where a potential wave 3 is likely to end. And as you see, that's sort of well in advance. Whoops. So if I do our risk reward tool, you would have come in at that red sell bar. So that was a potentially 18R profit. If I go forward, as we've already seen, the market declined nicely. Declined, came right down into the typical wave 3 WPT before starting to rally up into a wave 4. So as you can see, these gives you good tools to enable you to project in advance where swings are likely to come in. Again, you can do it for any of the Elliott Wave patterns or the major patterns. So you want to do it for wave 5. Just clicking here on the chart, and as you can see, there's the potential area for a typical wave 5 support zone. Turn trading mode off. As we've already seen, that's basically where the low came in there nicely. Just redo the chart. So if you clear everything off, then you come in here to confirm it, and there's your count as well. So that's the tool we have in our standalone version, MT Predictor 8, as I'm using here. We also have it in our NinjaTrader add-ons, where you can look to see what the Elliott Wave pattern is as the pivot's coming in. And also you can then use our WPT tool, sorry, couldn't say that quite well, WPT tool to project in advance the fib clusters of where the next Elliott Wave pattern is likely to come in. We only use the simplest and most common Elliott Wave patterns to avoid confusion. We don't try to do any X waves or alternate accounts or counts or anything like that. We don't believe in confusion, and the reason we don't do that is because we know that markets are basically random half the time, so half the time Elliott Wave patterns are not applicable anyway, and therefore you can't use Elliott Wave about half the time. So what we do is only use Elliott Wave patterns when the picture is becoming clear, and when we deem the picture is becoming clear is when the market is making a reversal around the higher time frame support and resistance zones. Just as a PS, if I go out to the higher time frame higher time frame chart, so to get an idea of where potential support was coming in, there's the last major low. Right mouse click, do decision point. That would give you an area of potential support, and as you can see, that's where the market made the low of the day as well before the main reversal start to come in. So you can see here with our 5-wave sequence down to the low, that's where the typical wave 5 and the wave 5 low came in as well, in and around the higher time frame DP support zone. So hopefully a good example of how to use Elliott Wave patterns and the Elliott Wave tool in MT Predictor.